We are only at the point where it is becoming somewhat acceptable to think about a 1% to 3% allocation to crypto, but that allocation process hasn't started yet.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Frank, thank you so much for joining me today. Super excited to chat with you. All right, Frank, you're the head of content and special projects at GSR. GSR is a market-making, venture capital, and capital markets partner focused on the digital asset sector. Previously, you were a finance reporter at Business Insider. And of course, you were a founding reporter at The Block, where you did many things, but most importantly, you were the host of the popular podcast, The Scoop. All right, Frank, how does it feel to be the Walter Cronkite of Web3? I've always called you that. I don't know if other people agree, but that's how I see you.
Well, I just appreciate you not comparing me maybe to the Jim Cramer of crypto.
Have people done that to you?
That comparison's been made. I'll try not to drop an F-bomb, though. I don't know if you saw him the other day talking about Trump's tariffs, and he accidentally let the F word slip.
Ooh, I did not see that. That is spicy.
Yeah, you gotta be careful with those on cable television.
So I have a question for you on media, just because I'm curious. I'm quasi-media from this podcast. Is media a good business? I know that's a very broad question, but everyone I speak to in media that is doing well, like I have friends, Jason Yanowitz, Blockworks, and others that are killing it, and they all say like media is a terrible, like miserable business. But what are your thoughts as someone who is in it?
Well, it's a tough business, and it's in crypto in particular. It's hyper competitive, right? You do have Blockworks, The Block, Cointelegraph, CoinDesk, all sort of chasing the same ad dollars and ad revenue. So you kind of have to figure out ways to differentiate. And one of the big problems, I think, with a lot of the firms, specifically in crypto, is it's difficult to sort of get people to pay for things. And that's the case across the media landscape, but in crypto in particular, especially as it pertains to data, right? We're all trying to bundle up data in a way that's digestible, interesting, and unique. But when you have a market where 80% or 90% of most data out there is free, it's very difficult to get people to pay for the, that 100% package where 20% might be differentiated and unique data sets. So that's probably the most challenging component to it, right? And in a market where you have so many channels of information, podcasters like yourself, the DB Newses of the world, competing in a sense, in addition to the established or quasi-established media brands, it's difficult to get people to open up their proverbial pocketbooks, I think.
Interesting. Okay, so the answer is kinda. It's an all right business. It's variable.
Well, I think one thing that's super important for companies across the space is to, in some component, in some fashion, be or have some element that is media oriented. What's the expression or the saying, right? Every business is a content business to an extent, which is part of the reason why I was brought on in my capacity at GSR, right? There are, when you have a firm like GSR or any trading firm or exchange that kind of sits at the center of the market, there's so much insight, there's so many capable people day to day that are practitioners in the market, and it can be difficult sometimes to sort of lift or extract those insights out to the market in a digestible way. But that's a very important enterprise.
Yeah. Okay. So we're seeing that trend across, like, I'd say tech and investments, and now I think you're probably the first signal of like crypto and media, so to speak. But we have like Eric Torenberg. He joined A16Z to kind of lead their media efforts. I guess Pomp is another example who's kind of crypto, but also TradFi as well. He's kind of a one-man show, though. He didn't really join a firm. He kind of made a big audience and now launched different entities. Harry Stebbins is, famous for his podcast and VC, and I guess Packy McCormick is probably another one who has like a great newsletter and then leverage that to launch a fund. What do you think about this trend of this, I guess, like media / investments combining into one? I know you just mentioned it for GSR, but how do you view that more broadly?
Well, I think it's a long story, right? Even when I think about when I first started covering crypto, I covered it from the perspective of market structure and the trading world. And it was super fascinating to see companies like Jump, for instance, which if you rewind the clock back to 2017, if you went to their original website, it was literally just a landing page that said Jump Trading. And then at the bottom of it, it had their locations, Chicago, the city in which you operate. And that was it. But then once they got into crypto, vis-a-vis the VC arm, they started being more, talk more loud, provide more insights and content. And in a way, like crypto almost pulled that firm and other firms like DRW out of the proverbial shadows of the market. And historically, trading firms have been very behind the scenes and quiet, and that kind of stems from a lot of the backlash that these types of entities faced in the sort of wake of Flash Boys and IEX and the drama around their role in the market, which still persists today. And in a funny way, the way market making has become a dirty word in crypto almost echoes and reflects the way in which HFTs were a dirty word in equities maybe 7, 8, 10 years ago. But anyway, not to get away from the point, which is that crypto brought these firms out of the shadows, right? Because crypto is such an interesting market where you have retail and institutions, at least up until this point, on a relatively equal playing field. And so to access deals, to access new markets, you kind of have to put yourself out there in a way that it was probably unusual for a lot of these folks and different. And so you saw, I mean, if you go to Jump's website today, right, like it's way more dynamic, so to speak. And this is the heart of it. To answer your question, in a way, when you think about being an investor, right, early stage investor, which GSR is to an extent, right? We have a VC book, I think, above $200 million. We're one of the most active venture investors and partners in this space. You need to build trust with founders, and you need to sort of build relationships with them. And to do that, I think, especially in the sort of AI world where allocating capital, I think, is going to become less differentiated. What you can differentiate yourself with is sort of this parasocial connection with market, which can be achieved through things like podcasts, for instance, right? And thought leadership and events and just putting yourself out there in that way. And that's why I think media and content is so important for firms operating in financial services, because you need to sort of connect with clients, with partners, and potential investment opportunities. And you're seeing that, right, with these treasury companies as well. Like they're all sort of going through this process of building out their brands, hiring sort of these key spokespeople, whether it's like Tom Lee. I think obviously there's been rumors in market that Joe McCann is going to be spearheading a new digital asset treasury company in Solana. They need that sort of cult of personality to sort of be the vanguard of the brand. You can't just sort of be a sleepy behind the scenes firm in this space to really drive momentum.
Yeah. Okay. So, I mean, you just said momentum, which is a really key word, I think, but it's you're talking about media is important for investment firms, broadly speaking, in today's day and age, especially, but for from a deal flow perspective, and also from a attracting capital perspective, and which that makes sense, that's logical. But I guess two questions: if everyone's doing it, doesn't that kind of dilute it? Like if everyone has some figurehead in front of their company, like you kind of, talking about the company and, there's just a million of us all talking about our firms, like does that dilute kind of the messaging a little bit? Or do you have to just get even almost like TikTok where you have to get even crazier and make even better content to stand out? And then secondarily, what is with the world today where like momentum seems like such an important factor, or like attention? We're seeing Palantir, which doesn't really trade off of fundamentals necessarily. Meme stocks, of course. There's a lot of crypto, of course, that does that as well. So, yeah, I guess like those two questions. What do you think about those?
Okay, so the question was basically
it was around because you said momentum, and then what I mentioned was the if every investment firm has a kind of a figurehead.
No, your point is really good. So, I think what's one thing that I've spoke to. I deal with a lot with founders. Like obviously, as a podcast host, you talk to a lot of founders, and then through a lot of the consulting and advisory I've done over the last year and investing, I work and talk with a lot of founders, many of whom are first-time founders who don't know how to engage with media or cut through the noise. And the one thing that I always tell them, the advice I often give is you need to sort of think about where the market is. What are people paying attention to? Reporters in particular, like the way their minds work is they're thinking through what is the next trend story that I'm going to get ahead of before all my reporter colleagues. It's a very competitive dynamic, right? Reporters oftentimes they want to look smart. Like there's a bit of an ego to the craft that is you want to call out things that are problematic for investors and clients of different companies, and also point them in the direction of trends that are shaping in the given segment in which you might operate. And so if you're a stablecoin provider or you're a layer 1 or a layer 2, these reporters aren't necessarily going to be that keen or interested in the day-to-day minutia and product, roadmap that you might have. But if you want to break through the noise, I always say try to think about what these trends are and ways in which you can contribute to that conversation. So the best way to break through the noise is not by hitting the market over the head with every product release or new hire that you have, but rather thinking very creatively about ways in which you can weave yourself into the conversation, whether it's the conversation about the proliferation, the Cambrian explosion of digital asset treasury companies, as we're calling it, the profusion and Cambrian explosion of different stablecoin tied entities or stablecoin like entities, or sort of the a year ago maybe the impact of ETF flows on the market. And so just identify those trends and can communicate to the conversation. Don't, swim against the tide, right? There are things that are interesting to people, and the best way you can sort of have your brand amplified is by injecting yourself into that. Does that make sense?
Yeah. So for example, if I'm trying to promote myself or my company, and digital asset treasury companies are very hot, would I make like a humorous take on DATs, or like
come up with a house view, right? Like,
okay.
Oftentimes as well, like I think a lot of founders or executives often think that they can't contribute to some of these conversations. I hear the amount of times I've heard, I'm not an expert on that, or that's not my lane. If I had $1 for every time I heard that, I'd be on a boat somewhere in the Caribbean. But you need to be creative. You clearly are in your position and have gotten to where you are because you are smart. And so I think be creative, be open-minded, and just contribute to the conversation.
So that kind of goes with the other point I made about the momentum. And I feel like today's markets, and I wasn't around like for the 70s or 60s or 90s or whatever, active in markets. So I don't know if that was the same, but especially in today's day and age.
The gray hair.
there's a touch of gray right there.
I was an embryo in the early 90s.
So is momentum just
Or uterus.
ultra important in today's day and age? It seems like attention and momentum are almost like above everything else that is so important. We're seeing like, yeah, again, meme stocks, crypto, there's a lot of interesting things around flows, and that's mainly driven by attention. But we're also seeing companies do things that are very unusual, like Anduril, which is a defense tech company. They sell missiles and cool, interesting gear and whatnot. And they're making like anime trailers for like their new Barracuda cruise missile, right? And they're releasing it. Like that is highly unusual, right? So yeah, I guess what are your thoughts around like attention at all costs and this momentum game that seems to be dominating the zeitgeist?
Yeah, I think that like everyone's looking for that tip of spear. Like if you have a franchise business, right, you need to think about ways in which you can educate, delight, and engage with what at the end of the day is a client base, but an audience. And whilst you can serve them with your financial services tools, you can also engage with them as an audience, and that makes the client base more sticky. I saw recently, I was doing some banking stuff, and I was on Chase's website, and they have this like interesting campaign with Joe Jonas, or one of the Jonas brothers. I don't know which one it is. And basically they're trying to promote Zelle, which is their peer-to-peer sort of payments app that's shared across different banks. And it's basically Joe Jonas going to these various restaurants in New York City. And at the end of the session, they split the payment. And that's the whole like theme of the show, right? Is, okay, we're going to these cool restaurants, coffee shops in the city. And then at the end, we set up the bill with Zelle. And I think it was super cool because I'm going through like one of the more recent episodes, and it's this super sick like Japanese matcha place in Brooklyn, and the content was just super compelling because I didn't feel like I was getting sold on Zelle. And here I am talking about it, right? Like they were clearly very effective. This podcast is sponsored by Zelle. But my first thought, was that I want to check this place out. It looks super sick. So I think big swings like that are super important, and making the content digestible. I was reading, and I often talked to my old producer and our old head of podcast or multimedia at The Block, Davis, is super at the cutting edge with a lot of multimedia video trends. And one article that he shared with me a few months ago was that 80% of marketers right now are looking at how they can expand video content in an age where literally we're scrolling through feeds of everything. And I think we're going to move away. When you look at all the crypto media sites, right, they're all dashboard oriented and replicating, and in some ways replicating or attempting to replicate the way in which traditional media companies have their landing pages set up. I actually think we're going to move away from that. When The Block started, we were like just almost like X, where it was just a feed of content. And I think we're going to move more towards that with more video, and sort of we're going to have folks meet the market where they are in terms of the way in which they digest content. More clips, more sort of quick content, because people don't really read anymore, right? Like they just read the headlines. And so I think you need to meet them where they are in that sense. Same thing with podcasts, right? Like you can record for 45 minutes or an hour, but most people are going to digest content in different ways. And so if that means splicing it up into different clips versus in addition to having the sort of long form, I think that's very powerful.
All right, I want to touch base more on that kind of the video trend and the kind of bite-sized content trend as well. But you mentioned previously the creativity or kind of what I took as creativity, trying to break through with the interesting messaging. You're talking about Zelle, and they had one of the Jonas Brothers on doing going to Brooklyn with the coffee house. And that was different and intriguing to you. And so, are you saying that in order to cut through the noise, you have to, number one, participate in the conversation so you're with the tide. But in addition to that, you also have to be creative and come up with your own theses and thoughts around like, hey, what is different that I like, for example, Anduril launching an anime for their cruise missile, right? Like, is that it's a little bit of both?
Yeah, I think that's exactly right. Like you kind of summarize the point very precisely, which is you need to sort of meet the market where they are from the perspective of how they're digesting the content, in addition to the topics and trends and themes that they're interested in. And if you don't do that, if you don't do both of those things, you don't have the right mix you don't have the recipe for success, in my opinion.
But so why is like, Sydney Sweeney, she just did an American Eagle ad where she's wearing jeans and whatever.
You're seeing a lot. I was watching ESPN yesterday, and they had a commercial, a Gillette commercial, and I don't know the name of the gentleman who was in the commercial. It was a dad and a son, but I remember them from Instagram reel memes. And I feel like brands and influencers are becoming increasingly a new marketing tip of spear, top funnel. And because of the proliferation of these influencer types, I think brands are trying to replicate that, trying to incorporate that into their marketing strategies more so than they did in the past, because that's where people are spending their time. Like people, I for one am turbo guilty of just like endless doom scrolling on my feeds, and so I think brands have to leverage that.
Yeah, no, it's an interesting world where like hot girl with jeans on, causes American Eagle stock to like increase dramatically when like that was just like a normal ad back in the day, but now it's considered different maybe.
Yeah, I mean there was some controversy around it, I guess. But you get people. That's how you get people talking. Or even, what was the one with the bathwater? Was that her too?
Yeah, I believe so. I think she sold. My sister was telling me this yesterday. She sold some of her bathwater. I think it was like $100 a jar. I don't know how she sold it, but
I think they made soap out of her bathwater or something.
Okay.
And that was Dr. Squatch, I think.
Interesting. Yeah. So like, again, creativity, very weird, unusual stuff that you can do and kind of stand out there. So okay. So what do you think the media companies of the future will look like? Because you're mentioning kind of, this shorter form, this digestible content, video being a big one. And now with AI video, like, I guess because in my opinion, it's like you either want to go really, really short or you want to go really, really, really long and go really in depth. But like, what are your thoughts on that?
I think that I think there's two things that are going to happen. From one perspective, the media landscape is being challenged by individual brands, right? And at the end of the day, people, especially we can talk about like the erosion of trust in our institutions, which is a trend that underpins markets and media and has for, the past decade, right? And as a result of that, I think when you ask most people who they read or who they trust or who they kind of lean on for being up to date, being educated on market, they'll give you a name, right? As opposed to, they're not going to say the New York Times, they're going to say Andrew Steinwald. They're not going to say NPR, they're going to say Frank Chaparro. And you've had a lot of really successful reporters kind of go off and just start their own entities around themselves, around their brand. And I think you're going to see more of that. And then from that, you can build a whole range of services and businesses. I mean, Pomp's an incredible example of that. Bankless is another incredible example of that, where you basically start with a content business that then parlays into venture investing, different types of financial services, deal making. So that's something that firms traditional media firms need to pay attention to, right? Because at the end of the day, like this direct connection to an individual is only becoming more powerful. And at the end of the day, like it's people's affinity for Joe Jonas that's going to deliver more business to Chase than the existing brand, right? There's this parasocial connectivity to the people that represent the brand.
Yeah, I mean, you're the exact, kind of example of that. It's like I trust Frank from the block, and Frank is Walter Cronkite of Web3. I'm going to start that. I'm going to make that a thing. But
I mean, I didn't pay you to say that, but I might have to.
how is AI going to impact the media landscape?
I mean, it has. I mean, my alma mater, Business Insider, laid off, I think, earlier this year, like 20% of staff. And you've seen a slew of layoffs in media because of the impact of AI. I think AI is a powerful tool. Like it is, and ultimately, I think whether you're a media company or a professional services company, if you don't leverage it, you're going to fall behind. I mean, it's basically that simple. I think it's going to make reporters more efficient. It's going to make reporters quicker. But at the same time, right, it's also going to result in, what are we calling it now? The AI slop. And you see it on Twitter, and it's like so asinine, where it's like you can tell from the M dashes and from just the way, ChatGPT has a specific like tone, and
it's like very cheerful.
It's kind of annoying in many ways. And so you're going to have like a Cambrian explosion of slop, but that gives media companies and these media brands a really great opportunity to differentiate themselves, right? And I think about a lot of accounts on Twitter, a lot of company accounts, and there's a founder, the founder of Noise, has been tweeting about this, a company I invested in, how it's so apparent. Like it's basically like the equivalent of like, we'll be able to identify genuine content powered by AI versus AI slop. In the same way that, we kind of cringe when our boomer counterparts use a bunch of hashtags in a social post. It's like, that's the M dash, right? It's like, okay, there's no soul in this. And again, that's why there's an opportunity, right, for brands that have that je ne sais quoi, that ability to identify the zeitgeist, those unique brand elements that make them who they are, to stand out in a world of AI slop. So there's an element where there's going to be less differentiation in some of the content, but how the content's presented and by the person that's doing the presenting will become an opportunity for people to differentiate themselves.
So do you think that, I guess going back a little bit, do you think that your move to GSR is going to signal that kind of a broader trend within the crypto investment sphere, that other, I guess, media-like folks are going to join these firms to kind of bolster their renowned and kind of send more deal flow and attract more LPs and kind of just do the whole cycle? Or what do you, is this kind of, in your opinion, like a one-off kind of event that you think is pretty rare?
No, I think it goes back to the point that I made earlier about the importance of multimedia content and creating relationships in an environment where, if you think about where AI is going, right, the investing element, a lot of that will be done by AI, and portfolio construction and thinking through investments will become less differentiated because everybody's going to be working with the same tools. And the thing that will differentiate people in that environment are the personalities, are the individuals that make up that franchise. And I've worked with a lot of clients at different firms that there is a trend there, because everybody wants to in some capacity, be or have some sort of media content function, because of that connectivity to market that it establishes.
So, okay, so your title is it's head of special projects and head of content. Is that correct?
Yes. Yeah. So there's a lot of intricate, there's a lot of projects at the firm, that when I think about that component, right? We do advisory, we do venture, we have systematic OTC, token market making. As new products are built out or expanded upon, thinking about the positioning of those new products to market is important across all business lines. So I see my role as coming in and thinking through, like, what exactly is the go-to-market for this, and helping create this bridge, this connectivity to market across these different verticals.
That's awesome. That's a super fun role because GSR is so. I mean, yeah, you mentioned you guys are very active. I know you guys are very active because I see you see GSR in a lot of deals. So it must be a pretty exciting. Yeah, I mean, and also what a cool name. Like head of special projects is a pretty exciting.
I'm some sort of like
secret agent. Yeah, yeah.
People call me up and I'm like, I've got a special set of skills.
Yeah, oh yeah. So okay, within that, what are some of the reoccurring themes that you've seen with startups in Web3 that are having issues? Like what are the reoccurring problems when it comes to go to market or just kind of, distribution and whatnot that startups keep running into within our space?
It's a good question. I think one thing that we've talked about on this program is just the issue of cutting through the noise. And I think in a market where you have, I mean, even just like if you go and look right at every, and this isn't a slight and it's not a criticism necessarily, but if you look at the Block, CoinDesk, and Blockworks over the last few weeks, right? 80%. I mean, yesterday, we had 3 digital asset treasury company deals, and BNB, Tron, and Sui, I think, all announced, about $2 billion worth of deals, right? Whether, I don't know which one was, one might have been a pipe, one might have been a shelf. But if you look at the coverage over the last few weeks, I don't know, like 70%, 60% of the stories are about the launch and rollout of these new DATs, and then every time that one of these DATs purchases or makes a purchase, that's covered. And so it's when you think about that reality, where each of these teams maybe has 10 reporters or 15 reporters, and they've got this new coverage segment to be on top of. I mean, it's a Herculean task to be a founder with something that you're announcing and then get coverage in a market where so much of the attention is being sucked by or captured by DATs. And then, of course, a few months ago, it was Trump and Trump adjacent meme coins that were getting all the attention. And so that is a challenge, right? And I hear that echoed across market from founders who just want some attention to be paid to what they're doing. And that's why, and then that goes back to the point that we've, made throughout this show, is that that's why it's so important for firms to control their messaging and have some degree of content to share their story. And again, not to share their story in a way that, bangs the market over the head with whatever it is that they're doing, but meets the market where they are, and sort of tactfully and tastefully engage with the topics of the day. But it's challenging, right? Especially in crypto, where things are moving so fast, and the hot thing of the day literally can change day to day. I'm sure you're the same thing. I mean, it's crazy. Like, I think yesterday, if there were 15 stories published by news agency Y, 10 of them were uh, in some way related to DATs.
Yeah, but I guess in order to really stand out, you have to be super creative, and being super creative.
No, you need to acquire a company on the Nasdaq and purchase even $100 million worth of crypto isn't even allowed at this point. Like, we're looking at billions of dollars, maybe not raised, but at least like targets, obviously targeted raise. And I mean, I just think that in a way is eye popping, and just totally different from the environment 7 years ago, where, I mean, I remember covering like Tether supply going above 100 million for the first time, and that was a huge deal. Now GameStop is, I mean, that's how much GameStop is allocating to their Bitcoin treasury. And then the question is, of course, like, when will all of this come to a screeching halt, which it will ultimately, inevitably come to. But that's just crypto. I mean, it's
So, but if you're a startup and you're trying to stand out, you're trying to get attention from, and you're not doing it that, like, what is? I feel like you have to come up with something totally unique and totally random that really catches people's attention, which in of itself is exceptionally difficult to do. If you're trying to run a company and trying to build a product and whatnot, and then you have to also be like, okay, now we have to come up with some very unique strategy to get all the eyeballs. Like, it's like a very, I don't know how people are supposed to do that.
and then you have, I mean, and then things just can flip so quickly, right? You look at the market share of pump.fund just overnight, just evaporating. So it's not just competing for the attention; it's also competing for usage and folks' pocketbooks. It quickly change on the flip of a dime, and I think that this is the biggest challenge. I mean, at the end of the day, like, if you're not keeping up with that pace, you're going to fall behind.
It's not easy. All right. So you mentioned the digital asset treasury companies. You think they're going to fail in a spectacular fashion. What do you think is the primary, or what do you think are the primary risk vectors when it comes to DATs?
Well, I think, like, I mean, the question is really like, do they create value, right? It just seems at first glance so they're basically turning $1 into three, and like, at some point you have to think like, this has to come to an end. I think that all of the easy money has been made, and people will try to innovate, try to do this with more assets. We're already going into the long tail of assets with the quote unquote long tail. I don't think that the vast majority of people want access to tokens beyond the top 3 to 5 in a way that's sustainable. But I think we'll see. I don't think that it introduces some additional risks to the market. And just like with anything else with crypto, like, I do wish things like stabilized and slowed down a bit. But at the end of the day, like, these some of these things are SPACs, right? So the approval process is very long, 3 to 4 months at best. And during that period, investors can't sell shares. So anything can happen over that period of time. Whilst we've had a lot of announcements over the past few weeks, what will be interesting is, in 3 to 4 months, how many of those, like, there is deal risk that some of these things don't get approved at all, because a lot of these crypto treasury companies, SPACs specifically, have not reached final approval, so they can't raise equity at the moment, and their model effectively is on pause at the time being. So I think in a few months, we're going to see a lot of these things kind of like wind down. But I don't think it's going to be in a few months, we're going to see some spectacular like leverage blow up, but I could be wrong. I think a lot of them will just kind of die quietly in the night.
So to push back on that, just to,
I'm not an expert on this. This is just my
wouldn't you, isn't there a case to be made? I'm playing devil's advocate here, but isn't there a case to be made that these DATs are useful in the sense of investors that are used to acquiring, buying equities and just regular stock market, Fidelity, their Charles Schwab, whatever, those accounts, they just want access to easy crypto exposure versus like going on Coinbase and buying like SWI or whatever. And isn't there a case to be made that like it's just a different set of customers that are acquiring tokens, just as if, when you first enter crypto, you buy some Bitcoin, then you're like, oh, what's Ethereum? Then you buy some Ethereum. And you're like, oh, what's this thing? And you kind of go down that rabbit hole. Isn't this kind of just playing the same model out in some sense within the traditional markets, but with these kind of SPAC type DAT vehicles?
Well, there's the component. So there's two components here. The idea that it's sort of like a more traditional mechanism of exposure is definitely one component to it. Buying one of these treasury companies is a lot more straightforward for people, for institutional capital, than it is to buy direct crypto. And then there's also a leverage component, right? Like I think we saw recently that JP Morgan, for instance, will allow certain clients to borrow against their Bitcoin. But that's just Bitcoin for the time being, right? I don't think that banks, even in the new regulatory environment, have the mandate necessarily to offer leverage against or prime services against crypto. And so this solves for that, right? Like if you have equity in a crypto treasury company, you can borrow against that position in the traditional system in a way that you can't with crypto, direct crypto holdings. So you get this element of leverage that is super beneficial and makes things more capital efficient for investors. And this is also tied to the broader trend that I think is super interested and not talked about enough. When we had our credit crunch, our credit crisis in the wake of FTX, which is really what that drawdown was. It was effectively an over-levered market that quickly unwound because you had not necessarily under-collateralized loans, but you had loans that were collateralized by bad collateral. And so you had loans on FTT. And so those loans might have been collateralized until FTT then drew down 80% or whatever it drew down. And so you basically had the evaporation of credit in crypto. And today we're sitting here and so that market almost has been replaced in a sense with these DATs from a leverage perspective. But what's super interesting about that is we're sitting at 118 Bitcoin without sort of this incredibly frothy, unsophisticated credit market. And so I think as those pipes roll out and become more robust, crypto will benefit. And we have much more of a floor without that propped up leverage today than we did in 2021, which I think is very, very bullish for the asset.
So wait, you think DATs are like a symptom of a lack of?
I think they're a manifestation of a lack of robust credit infrastructure.
Because folks want to, I guess, be a little more degen, essentially. Is that kind of the?
Yeah.
Interesting. Very interesting. Well, what about these crypto IPOs that like these traditional companies like Kraken and Circle and whatnot that are launching that are also kind of these are regular companies. These are solid companies. But Circle, like for example, is almost in meme stock territory. So what, are the public markets just starved for new narratives and excitement?
It goes back to your point about this desire for crypto exposure. You don't, the process by which the process you need to go through to, get a bag of sui or ton is much more lengthy and complicated than it is to just get equity exposure. So I think the price of Circle being where it is, like, it's some insane multiple to revenue, is tied to the fact that companies simply just want crypto exposure, and it's difficult for them to do that via direct crypto. And also, like, there was an interesting juxtaposition for a while where, Coinbase wasn't necessarily benefiting from that same tailwind. And I had a former colleague at the block, Stephen, who made the interesting point about how, like, to an extent, Coinbase, I mean, like, to an extent, the market just wants new shiny things, like how, 2017, what do they call them? Dino coins don't benefit as much as like newly launched coins. The market just wants something. It's a mix. They want the crypto exposure, but they also want something that's new and shiny. And that's how you get a circle pop like that. And there's also the undercurrent of, like, just stable coins being so red hot. I mean, everyone's buying into that narrative. It's almost like there's not very many contrarian voices on stablecoin at the moment. And so I think, so a mix of equity exposure, something new and shiny, and just the stablecoin narrative definitely.
I mean, on stables, it's like, I feel like the contrarian thing now is to believe that we're all going to use some unified stable, right? It's going to be like all USDC. Now it's like, oh, PayPal's going to have a stable, Walmart's going to have a stable, like everyone's going to have stables. Like that's like kind of the new thing. Going back to the crypto products in these public markets, we have, BTC ETF, we have the Ethereum ETF. We're going to have ETFs for, like, probably a lot of coins. Do you think that we are going to, just how crypto is like always copying finance or TradFi in some capacity, or like relearning the lessons of TradFi? Do you think that the public market investors are going to kind of do a similar playbook that crypto investors have done for years, where it's like, you buy some Bitcoin, then you're like, oh, what is Ethereum? And you buy some Ethereum, then you slowly go, like, kind of down or I guess up the degen scale? Do you think it's going to happen?
Yeah, I think so. In terms of, well, I think so the question is, will you have this like maturation effect, right? You kind of start with like futures, you start with derivatives, then you get an ETF, and then once you kind of have all that in place, like, different financial services companies can start offering services around those assets and access to those assets. And I think basically every asset will follow that same path of asset maturation.
But I guess more so in terms of like price action is going to be, Bitcoin goes up, and then people are, then ETH goes up, and then XRP, and then these are like the ETFs is what I'm talking about. Like, are people going to follow that quote unquote traditional crypto path in the public markets in some sense?
I think that there is a blending effect that's happening. For one, they don't look as different as they once did, and at the same time, whilst crypto and equities are kind of becoming more intertwined, you're having diversification happening within crypto, where you don't necessarily see, as you did maybe a few years ago, Bitcoin go up 5% and then alts go up, like, sort of echoing that price action by, I don't know, serving as some sort of like beta to Bitcoin. You're going to have different segments catch sort of waves, whilst others don't. Over the next few months, I think that's going to underpin this cycle.
All right, Frank, you have to go in 2 minutes, unfortunately, even though we could talk for hours and hours. But Ray Dalio just recently said you should have a 15% allocated to gold and Bitcoin. What are the ramifications of that? That's huge.
So I think I tweeted about this yesterday. Like, his journey almost like, I feel like
He was a hater.
it almost like I can bookmark my own career covering crypto with with his evolution. And his evolution is not totally unique, right? You saw the same evolution with Larry Fink, who in 2017, and this isn't to like hate on them, but 2017, all these Wall Street types, they go through the same cycle of like, all of crypto's evil and money laundering scams, to, okay, we buy into the power of the blockchain, but crypto is something else, to then actually like crypto could be interesting, to then crypto should be a part of your portfolio, to it should be 1% to 3% to 5%. Rick Edelman, who is a big player,
Wealth manager.
yeah, in the IRA space, I don't know, his number I think was like 20 or something crazy.
No, 40%. He said it 40.
So all of Wall Street is almost like kind of operating on the same curve of adoption. And I think that's super powerful. Here's the last thing I'll leave the listeners with, is that movement of flows has not even begun yet, right? Like, we are only at the point where it is becoming somewhat acceptable to think about a 1% to 3% allocation to crypto, but that allocation process hasn't started yet at all. So it'll be exciting to watch that play out.
Amazing. Frank, thank you. This has been incredible. Where can people learn more about yourself and GSR?
You can follow me on Twitter, or X rather, FinTech Frank. And then if you want to learn more about GSR, gsr.io.
Amazing. Thank you, sir.
Thank you. Take care.